Hi, I'm Max Kaiser. Welcome to On the Edge. Time now to go to Shanghai and speak with Dan Collins of the ChinaMoneyReport.com. Dan, welcome back to On the Edge.
Thanks, Max. Good to be back.
All right, Dan Collins, on your website, you write, the China will magically implode crowd is getting desperate. Tell us how and why the reasons that China will not implode.
I heard a good quote the other day from Now Ferguson, who said, all the China experts who I talked to who spent any time in China don't really believe China is going to magically implode and therefore conveniently restore Western ascendancy. He said, don't bank on it. I totally agree with his thought process there. The so-called China will collapse crowd, we've 2 years ago it was the Jasmine Revolution. You know, reality was we had 14 people show up in a McDonald's. Somebody left a jasmine flower, and then they left. But this made all the media all over the world. Wow, big story. Then the property bubble, the ghost cities, and now this last week it's tanks on the streets.
All right, let's talk specifically about the banking sector. How much is on deposit in China's banks, and what is the amount of overall leverage in the system?
Total banking sector has roughly about $13 trillion on deposit. The Chinese banks are quite healthy. China Construction Bank just reported $27 billion in profits for last year. There's bad loans issues, but the main issue here is as they work through reducing bad loans, most of these loans are state-owned enterprises, so they have the government's $3 trillion rainy day fund backing them up. So in terms of a banking sector, myself personally, I mentioned China Construction Bank with $27 billion in profit. Their CEO last year made less than $1 million. So those are the kind of banks I would invest in as opposed to, the U.S. commercial banks.
Now, how about the ongoing currency wars? In the U.S., for example, under quantitative easing round 2, this had the primary effect of debasing the Chinese yuan. Because the government in China would not voluntarily debase their currency, so America debased it for them by exporting some inflation vis-a-vis this quantitative easing. Do you see any more flexibility on the fixed dollar-yuan rate ratio going forward? How is that playing out currently?
Yeah, I believe China has kept the renminbi too low for too long. Most of the products that China exports, really China is the only game in town. There's nobody who's going to compete with them. So you could see renminbi appreciation of 10, 20, 30%, and you're not going to get any real drop-off in business. Take a look at the textile industries. Even there, any loss of business there, they usually make up for in domestic growth. So these QE wars you mentioned, I absolutely agree. These have sent, this is part of the reason why this week the BRIC nations are meeting and crying foul here, because these countries are producer economies. They're real economies. And when the Federal Reserve prints all this money, they're sending massive shockwaves of inflation into these BRIC nations.
Well, you brought up the BRIC nations. There was a meeting of the BRIC nations, and they're talking about creating a BRIC currency for them to use amongst themselves, possibly as a precursor to bring in a BRIC bank to compete with the IMF and the World Bank. Robert Zoellick over at the World Bank thought it was a great idea. Of course, it would come under the auspices of the World Bank, so some are questioning whether it would be truly independent enough. But how do you see that playing out? A new currency amongst those countries together and a new bank to compete with these other mostly U.S.-dominated world banks?
Yeah, well, I see the BRIC nations as working together. What unites them is they're really being ripped off by the same countries. The money printing countries, mostly the U.S., but now the EU and also Japan. Within the BRIC nations, though, we have to take a look at who's the main player there, which is really China. China has a larger GDP than all the other BRIC nations combined. And I think really going forward, the BRIC strategy will have to be led by China. All these nations are looking for a new replacement of the U.S. dollar. It makes no sense for Brazil to send soybeans to China and China to send manufactured goods to Brazil, and they both collect U.S. dollars. At the same time, the Federal Reserve is printing dollars, faster than you can count them. So these nations, the writing's on the table. They started meeting 2 years ago, discussing what they're going to do. All the currency swap agreements are in place. China's got swap agreements last year with Russia. They will move trade into their own currencies. Even Japan was here a few months ago saying we need to move trade into yen and yuan. So, I think the clock now is ticking on U.S. dollar, and it's just a matter of time before we see an alternative U.S. dollar. My opinion is if we see an implosion of these global economic Ponzi scheme in the next few years, it'll be a gold will basically become the reserve currency. If we can muddle through another 5 to 10 years, we may see the renminbi as the alternative reserve currency.
Okay, so I don't take it, therefore, you don't see the euro as having much of a role over the next few years, because up until even last year, it was talked about as being the competing world currency with the dollar.
Yeah, and it has been for 10 years, but we've seen the results of trying to integrate so many disparate economies and countries. It's somewhat of an alternative currency, reserve currency along with the Japanese yen, but we really have not gotten the strength that people expected. China's the world's largest trading nation, the world's largest trade surplus. They're going around the world building the roads, the bridges, the power plants. They've got the economic muscle now in the future to actually create a potential alternative reserve currency.
All right, let's go back to China's property sector, because this is the area that most people focus on. And it has been the subject of much of the international speculation about an imminent collapse in China. We do see so-called ghost cities, the reports of the ghost cities. I know Hugh Hendry, who's a money manager at Eclectica Fund, who's made a lot of money shorting China over the past few years. He was in China, made a famous video showing these ghost cities. What are your thoughts there?
Well, I think most of the money in shorting Chinese companies have been done on doing the reverse merger companies in the United States. If you're trying to short the China macro story, it's not worked out. It's still 8% GDP growth. Properties in China, half have been paid with cash up front. Another 50% have at least a 20% down payment. So you could really say, okay, maybe there's a pricing bubble in China. That's debatable. But there's no credit bubble like there was in the United States and still is. People in the Western world are now living an entire generation within a credit and debt bubble. And I don't think they can see what's real economic growth and what's fake economic growth. There are some areas of overinvestment, absolutely, but that's why China now has a 9% interest rate to industry and enterprises. So they have put on the brakes. They have engineered a slowdown to try to get ahead of any potential property collapse. And right now, we just don't see it. Property prices, although you see it all over the media, they really haven't dropped much at all.
All right, let's talk about rogue bankers and financial fraud and banking fraud. Around the world, the criminal bankers are allowed to basically run amok. And in fact, they've been put in place as unelected technocrats in charge of several European countries, Italy, Greece, for example. How does China deal with the problem of rogue, fraudulent bankers?
Well, it's interesting. 2012 is really turning out to be the year of living dangerously for bankers and fraudsters in China. So last week, the Kwok brothers were arrested in Hong Kong. This was huge news. This would be like Warren Buffett or Bill Gates being arrested in the United States for fraud. This family, the Kwok brothers, are worth $18 billion. They've now been arrested for collusion in the property sector. But, on the China Money Report, we've got about 10 stories there, all detailing name after name of death penalties that have been handed out this year for fraud within the financial sector and the banking sector.
I'm always impressed by this action taken by the Chinese government against rogue bankers. It's a very interesting dance that they play, because on one hand, these bankers do facilitate the creation of these huge infrastructure projects and housing projects, and they invariably go astray. They cross over the line of what's legal and not legal, and then the government comes in and clips their wings, or in some cases, actually, they are subjected to capital punishment. But where does this dance? Do the people know the rules of the game, so they're just taking a risk by inflaming the anger of the government and doing what they're going to do anyway? It seems to be that there's a bit of Cobra versus Python dance of death going on between real estate developers and the government. Can you speak on this a little bit?
The lesson here for the United States is that you have to arrest some people some of the time instead of none of the people none of the time. Corruption's endemic in China. They're starting to tackle it, and they're not going to get rid of it. It's going to be all over. But if you don't take out at least some of the people, then the moral hazard there where everybody's going to do what they get away with. The other thing is China is more of, I'd call it a real economy corruption. The bankers, they're not writing derivative products. They're not losing their shirts to hedge funds on ridiculous insurance, exotic financial products. They're loaning money into the real economy. The type of corruption in China is a guy who works with the government, gets access to a cheap coal mine, but he's not going to make money unless he actually sells coal and produces something. So it's kind of it's still corruption, but as opposed to the United States, where the corruption is all based at being at the head of the money funnel and the credit system and getting access to cheap money. That's where most of the fraud takes place.
Yeah, I saw the headline about the Kwok brothers, and first thing I thought it said the Koch brothers, two famous brothers in the U.S. who are billionaires, who are very political, who are in the last year or so have come under the radar of the Occupy movements and other movements as being part of a kleptocracy. But what did the Kwok brothers? What was the straw that broke the camel's back in this instance? Was there a specific act that they did, just out of curiosity? What was that final indiscretion?
Well, the Kwok brothers are one of the Hong Kong oligarch families, worth about $18 billion. In Hong Kong, they say a typical day is you ride the bus to work on one of Li Ka-shing's buses, and you work in an office building owned by the Kwok brothers, and you go home and live in an apartment owned by another oligarch. So for these guys to be arrested, I mean, it's really amazing fact that they're taken on the very top of the pyramid of the endemic corruption in Hong Kong society. What they've done is the details are still sketchy on what the charges are going to be, but mostly involve collusion on property deals, working with the government to get access and get around rules and regulations and get access to lower valued land, things of these natures.
All right, I want to go back to this BRIC meeting because it is a seminal event, and so much of the underlying themes that have been with us for a few years seem to be coalescing into a bit of an inflection point. I, for example, noticed that the leadership in India was very critical of America's foreign policy and military, and of course the military of America, the Pentagon of America, is part of how the U.S. can keep this U.S. dollar world reserve currency status, is that the quid pro quo, in many ways, is that they are protecting countries with this massive military buildup in exchange for these countries using the dollar as their reserve currency. But India was expressing huge dissatisfaction with that arrangement. That's just one of the themes. But the overall theme seems to be, we've touched upon it a little bit, that countries that are in, as you call them, the producing countries, they want to break free from the dollar. They see the dollar as an impediment now. But when they do so, Dan, they're going to lose that military escort, if you will. How do you see that playing out? Is China going to build up its own military and beyond what it's already building up? Are they going to be more militarization as a result of breaking free from the dollar?
Good question, Max. Yeah, I mean, we've seen the last 50 years has almost in a way been a Pax Americana with the Cold War and then one superpower. But we have, since the Cold War ended, we've gone into a crusade around the world to try to make democracies of countries, mostly in the Middle East and North Africa. These countries, China in particular, was very upset with Libya. Over 30,000 Chinese had to be evacuated from Libya. This whole currency system, this fiat currency system, without this printed money and debt, there is no American military empire. Now, as the dollar fades, the military is going to fade as well. This is very similar to what happened with the Soviet Union. You can have a strong military years, maybe decades after your economy collapses, but it doesn't last forever. We saw that in the Soviet Union. We're seeing that in the United States right now. We have a global empire military, hundreds of bases around the world, but we can't make steel for ourselves. And we make, 7 million cars. China makes 20 million. So as the world goes forward, there is a modest arm race now in China. We have in Asia in general. It will be interesting in the future. There's problems with Vietnam and China between South Sea oil. There's problems with China, India, two biggest guys on the block. So it'll be interesting as it goes forward. Europe had world wars 1 and 2 that makes future wars highly unlikely for at least another 100 years. Asia had Japanese imperialism, but there's a lot of old scores to settle in Asia that as we see the American military rescind around the globe, we may have trouble in Asia. That is potential risk.
Dan Collins, you mentioned, of course, that the possibility of a military war is in the works as a result of this global reconfiguration of currencies, which would necessitate some of these countries getting back into the military hardware business. On top of the currency war that's already raging, we know that China official stated gold position is 1,000 tons of gold. But this is, of course, something that they want to beef up as much as possible. They have agents around the world securing gold, really secret. We know last year that there was a sudden transference of 500 tons to the official People's Bank of China balance sheet of gold, etc. Is this still very much in play? Are these agents out there accumulating gold, Dan?
Yeah, absolutely. The number you mentioned of the tonnage. Remember, that's just Chinese central bank holdings. China has a lot of off-balance sheet holdings of gold in the commercial banks, in private insurance, companies that are just huge companies. But in addition, for the last 5 years, they've been pushing on the normal citizens here to buy gold. You could go to a Bank of China retail outlet in a very tiny city here, and they have gold bars on display for sale. You can hold paper gold here in the bank, which is backed up with physical at the banks. So they're still after gold. They're the world's largest miner of gold, and they're also still the world's largest importer of gold. And I expect China in the future will keep shocking people with the numbers of gold that they import.
Yes, it's very interesting to see the contrast, because in the U.S. or in the U.K., you have many shops that are set up for people to sell their gold for cash. And people are selling out of the gold that they have to get that fiat dollar. In China, it's the complete opposite. They're desperate to get a hold of the actual shiny stuff. Now, let's talk about the economy of China in terms of the low-cost, low-margin manufacturing model that's done so well for the economy. Are they trying to introduce some other planks to the overall economy? I noticed, for example, that General Electric, which has outsourced to China over the years, is now reversing that to some degree. They're onshoring jobs back to the U.S. because of the cost structure in China is changing. Wages in China are going up, famously at the Foxconn plant where they do the Apple manufacturing. They've been able to get those wages increased. So what's happened? There's a tectonic shift there in terms of the model. Are they going to try to stick with that model? Or are they going to introduce some new models? Where are they going? They're going up the value chain, no doubt.
Yeah, it's interesting. The whole innovation argument, there's some truth to it, but I think in general, it helps Americans feel better. They look around, Detroit's and Cleveland's and Buffalo's, and you see pawn shops and cash check now stores and Dollar Trees. And then, the Chinese can't innovate. Well, last year, China passed the United States in patent applications. They have a commercial aircraft company now that's competing with Boeing and Airbus. The space program is very impressive. Where, on the other hand, in America, we have to buy seats from the Russians to get to the International Space Station. We talk about innovation. You mentioned General Electric, which is quite interesting. These moving plants back to the United States, it may happen, piece by piece, but there's no general trend to that happening. And you can be sure that when one does get put back in the U.S., it makes headlines all over the country. But General Electric's interesting. If we look at innovation, China just built the world's largest high-speed rail network in the last 5 years. And when we look at U.S. talks about putting a plan together. General Electric submitted their plan, which was basically buy the train system and all the rails and all the parts and components from the Chinese high-speed rail company. And in the U.S., they would handle the politics. So that's basically a microcosm of U.S. industrial might and manufacturing.
All right, finally, Dan Collins, one of the biggest trading partners and rivals of China, of course, is Japan. Tell us about the Japanese economy. it's in an apparent meltdown at the moment, presumably that both benefits and harms China.
Yeah, Japan is really what keeps me up at night. I think this country could be the trigger that brings down the whole global Ponzi scheme in the developed world. I've always been a proponent of Japan. I always thought, I would tell people, look, they have an industrial economy, they export, and where would you rather live, Hiroshima or Detroit? Hiroshima is actually a nice place to live nowadays. However, the problem is they've had decades of problems they haven't dealt with, including debts, demographics, and this tsunami last year has really changed the game. They have 2 nuclear reactors now working out of a total of 54, and without electrical capacity, you lose your industrial capacity. Industrial capacity takes around half of the electrical grid in a manufacturing country. So without this, on the flip side now, they're also importing fossil fuels to make up for this lack of nuclear generation capacity. It's turned the trade surplus negative. And then we go down to the demographics. 1 out of 4 people in Japan is over 65. My own background's in engineering. I've spent many times in Toyota, Honda engineering departments. You look around, most of the guys are getting close to 60 years old now. They don't have the drive they used to have. The iPod has replaced the Walkman. The Xbox has replaced Nintendo. Sony has lost on money on televisions for 8 years in a row. They used to have a $100 billion market cap. Today they're $18 billion. Company after company, Panasonic, Sharp, worst losses in history. So you have demographic issues. You have trade surplus going negative. The savings rates in Japan, usually 30%, are down to 2%. They're saving less than Americans. And this all catalyzes itself within the debts. So 400% debt in consumer and household and corporate debt, and 225% debt to GDP. So these guys, the world's largest creditor nation at one time, only a few years ago, are now going to become an international debtor. And this is going to have cataclysmic effects on the global economy.
Well, Dan Collins, we're out of time. Thanks so much for being on the Edge.
Thanks, Max.
All right, and that's going to do it for this edition of On the Edge with me, Max Kaiser. I want to thank my guest, Dan Collins. If you'd like to send me an email, please do so at ontheedge@presstv.com. Until next time, Max Kaiser saying bye, y'all.